let's get the big picture of the market. We had another wild week. First off, read this disclaimer carefully. This is the overview for week 17. Let's first get some of the big news. The chronic condition with the strongest association with the contagion was obesity, with a substantially higher odds ratio than any cardiovascular or pulmonary disease. Obesity is a huge problem in the West, especially USA, which is why I think USA will be hit hardest by the contagion. In other news, US State Department cables warned of potential SARS-like pandemic after visiting Wuhan lab experimenting with bat virus. Well, this was conspiracy theories a few weeks ago. Now it is becoming fact, and this will have substantial ramifications. There is an extremely high likelihood that we will see an escalating conflict between USA and China. USA does not want China to become the next superpower. They want to be that alone. And I think that USA will go pretty far to make sure it stays like that. And they now have a setup. They do have they have a narrative that they can build on. I do think that the Cold War will pick up in heat, and that will be the next bearish factor for the market when the contagion goes back. Then you will have an escalating conflict between two powers. In other news, US housing starts plunge 23% in March. 1.2 million versus 1.3 million expected. Jobless claims total 5.2 million as 22 million positions have been lost in a month due to virus. And this is why I think we will also, as if we didn't have enough things to worry about, I think that the rift between Wall Street and the Main Street will just escalate going forward. And I think that this will create tremendous social tension. Because the problem is that we are now having a very strong comeback rally in the stock markets, simultaneously as the economy goes down and we have massive unemployment. The difference between Wall Street and mainstream has gone nuclear. It's extreme. And of course, this is something that can very quickly lead to political radicalization. So the most bearish thing that can happen, that's if this comeback rally breaks out to a new all-time high, simultaneously as we have spiking unemployment, and that would be disastrous. Gilead drug produced rapid recovery in virus patients, report says. And then the final big news of the week. Dr. Luc Montagnier, the man who discovered the HIV virus back in 1983, disagrees and is saying that the virus was man-made. And that's something we are seeing increasing evidence for now. It really seems like the virus escaped from a laboratory. That's a major problem. That's the news. Let's look at some of the big numbers of the week. So, strongest performance is from the stock market overview, 1.59%. Doom and gloom portfolio is pulling back. It is still leading year to date. Country ETFs year to date is still the big loser, minus 25%. As far as the individual performers, you can see that Nigeria actually had a really good week, up 8.51%. Crude oil tanking, minus 20%. Uranium is having a great month. Volatility is still, the big mover year to date. And crude oil, the massive loser. Looking at the entire newsletter, we can see that Rewalk Robotics, that's in the cybernetics theme. It had a very strong week, up 67%, huge move. Chesapeake Energy, down minus 57%. It looks really bad for Chesapeake, but I will include it in the in that portfolio until it goes bankrupt, because it could be, helped, saved in the last minute. It could happen, but it looks bad for Chesapeake. And that's a general thing when it comes to the themes I design. I want the themes to reflect. I want the components of the theme to reflect the theme. Volatility Bull is the big winner year to date. The ETN up 317%. Looking beyond the leveraged products, you can see that Whiting Petroleum is the biggest loser year to date, minus 95%. And the Whiting Petroleum is also the biggest loser of the month, the year, and the last 3 years. Rough times. Well, let's get to the stock market overview. Nasdaq had a very strong week, up 7%. Volatility index, it is continuing to pull back, but it is still at elevated levels. There seems, however, to be some... the markets are calmer, there is more of a bullish sentiment. The problem is that we have seen this movie before, and during some of the worst bear markets in history, this exact thing happened. It is true that the Federal Reserve, with their gargantuan money printing, they could save the day. It is just that they have already pushed it so far. I mean, what they did way back in the housing bubble is something people didn't think they would be able to pull it off. But now it's gone really, really far. One of the ways they could save the markets, that's if we get a new digital currency. That is something that it's been talked about. It hasn't happened yet, but if there is a digital currency, and with that they can do all kinds of things. They can have like a time limit, like an expiration date on the payments you get, which means that you have to push it into the economy. And I mean, there's quite a few things they can do, but I mean, this entire year proves one thing: money is make-believe. It just is. It is make-believe. Let's look at country ETFs. Nigeria is the king for the week, but Australia is the big loser, minus 6% here for Australia. Denmark is the strongest performing year to date, down minus 7.55%. Brazil is still the big loser. Here we have the S&P 500. It is still down minus 11-ish percent. So you can see that Denmark is quite substantially, well, it is significantly outperforming the S&P. But then again, the S&P can't hold a candle to gold, up 11%. But overall, if you look at the last month, there's been a lot of repair. We are up. The average of all these countries is a 20% gain. That is impressive. And we have some super movers here as well. Then again, the biggest rallies we do get is in bear markets. The Doom and Gloom portfolio, it is still up 10% year to date, significantly outperforming the S&P 500. And you see that the massive damage it's taken is in the last month, and that's, due to the rally, because these are bearish ETFs, so they will go down when the market goes up. Gold is very strong. In the fixed income space, the 20-year Treasury bond, it was up 1.46% for the week. It is the winner over the last 3 years, the last year, and year to date. The Federal Reserve, I mean, they are buying all kinds of ETFs now in the fixed income space, and it's not a coincidence that we have these huge moves in investment grade corporate bonds, the high yields, basically junk bonds. And it is also fully possible that the Fed is going to start buying other kinds of ETFs, like stock market ETFs. They currently are doing the indirect thing by giving the banks a bunch of money, and then the banks buy ETFs, in the stock market. Stock market ETFs. So next we go to Forex. So US dollar strengthened significantly here against the South African rand over the week, the month, year to date, and the last year. The big question is whether this move that we've seen, maybe it's gone too far. I mean, we saw something similar with Norway earlier, where there was this explosive move against the Norwegian kroner, but as you can see over the last month, you see that the US dollar has weakened significantly against the kroner. So that's the big thing here. Is this move just this excessive move, and then you can start to think more as a contrarian? Next we go to natural resources. Uranium, strong week, and also a very strong month. But that's definitively a commodity we want to keep our eye on. Lean hogs really getting slaughtered. Year to date, gold is the big winner, crude oil the massive loser. You can see here for the week there were some significant moves. Lumber had a big move as well, up 6%. Nickel, if you look at the category year to date. Precious metal is the big winner, minus 3%. Biggest loser, it is fossil energy. Among the grains here, oats, good month. Year to date, seems like soybean meat, no. Canola is the biggest winner in the grains category. The thing about the lean hogs is that given that they've seen this massive pullback, I'm not saying this is the time to think contrarian, but there might be some time. Another one to keep on your radar for a trend shift. Let's go further down to specific strategies. The AI-powered portfolio selection won the week 8%. That's impressive. Mom is still the gargantuan winner year to date. Market neutral momentum up a whopping 30.20%. Even though there was a rally in the stock market this week, the market neutral ETF went up almost 5%. Really, really impressive performance. Massively outperforming the S&P 500. You can see that there are some blue numbers here. That's big moves over the last month. Global natural resources, huge move. Convertible securities, and also preferred stock, almost 35%. Let's go to the sector ETFs. Best performing of the week is healthcare, real estate, biggest pullback. So healthcare is really dominating here. You can see that it is best of the week, of the month, year to date, the last year. Year to date healthcare it's down minus 4.79%, massively outperforming the total world stocks and the S&P 500. Looking at individual members, genomics, huge move for the week, 12%. Regional banking, massive pullback, minus 9%. Bullish online and bearish stores ETF is the big winner year to date, almost up 29%. Huge outperformance. Let's go to basic materials. So yeah, this has really been the time for the precious metals. Gold miners, precious metals, gold miners, huge performance. On the other hand, metals and mining is in trouble. When we look at the gold miners here, this is the GDX. It is up 2% year to date, and some huge moves over the last month. If we go here to consumer cyclicals, that one, year to date, big performance. You can see that over the last month, there's been a very big move here, 25%. slightly outperforming the S&P 500. Financial services. The gig economy ETF is the best performing with a -4% year to date. The gig economy, it's a big trend, and given the turmoil now in the labor market, there is good reason to think that that could be a benefit to the gig economy companies. Real estate, year to date, -30%, so much worse than the S&P 500. There's been some comebacks, you can see this is year to date, this is the last month, so huge divergence. But seems like the bears are at it again, all are losing for the week. Consumer staples. A rather mixed bag. You have the classic consumer staple ETFs here, they are outperforming the market, but then you have these that are significantly worse. Then you have healthcare, which had this very impressive performance. Almost 29% for the month, 6% gain for the week. Really good. You have some that are, you have one that is positive year to date, and that's Genomics, up almost 12%, even though the world stocks is down -16%. Yeah, there are winners out there. Global healthcare is almost positive, down just 1% year to date. I mean, that's good. Then you have the utilities, communication. Networking is the only one that reported a loss for the week. Energy, I am waiting for data for these, because there was a stock split and investing.com has not recalculated the numbers. Yeah, so I have complained, and they better fix this, or I will just get another service to give me data. Investing.com is a great website, but yeah, I mean, especially they really are terrible when it comes to recalculating after stock splits. Then you have the industrials. You can see that year to date, the sizable losses. The best performing is robotics and artificial intelligence, -12. That is more than the S&P 500, but you have to take into account that many of these ETFs, they have a relatively high beta, meaning they are volatile. Hence, this is actually more impressive than it might look like. Then you have technology, and here it gets really interesting. We've seen a big movement in the Nasdaq, and you have someone that are positive year to date. Cloud computing, Internet of Things, tech software, and you have candidates like China Technology is almost positive. China Internet is positive. Next we go to the themes. Teladoc, huge winner, 107% year to date. You can see here, -17% average. I have done some changes to the themes and we will see them soon. Blockchain, positive year to date. E-commerce as well. And interactive entertainment. Artificial intelligence, massively outperforming the S&P 500. Microsoft, huge win for the week, for the month, year to date, last year, last 3 years. Also Tencent, very good performance. Batteries and cordless electronics. This is a really interesting trend, but yeah, there is volatility for sure in this space. Lithium Americas, good performance year to date. A loss, but much better than the S&P 500. NIO had a big move. They are in the electric car business. We also saw that Tesla had a big move. Something is definitively happening in that space. Hence, I think that those who want to short Tesla, yeah, I think they're going to have a rough time, especially long term. biometrics and cybersecurity. Yeah, definitively on the increase due to the virus. Applied DNA Sciences, big move for the week and year to date. Average here -6. Blockchain, you only have IOTA, Ripple, and Bitcoin in the loss year to date, but those are modest losses. Big wins here for Ethereum and Monero. Clean energy, NextEra Energy and TerraPower positive. A very mixed bag. Long term though, I am very bullish on clean energy. Here are the cold value stocks, huge move for the month. Sport.com is the best performing year to date, 26%. Then you have cybernetics and bionics, really strong week. Huge moves across the board. Also for the last month. Yeah, we are deep in the red though year to date, -40%. This is basically a testament to how volatile this space is, though looking long term, there is no reason not to be bullish on cybernetics and bionics. The problem is, this is an emerging industry. It's still in the very early stages. You have a few companies that have contracts where their bionics are used in manufacturing. As an example, Exo Bionics, they have a contract with Ford, but this is still is very early. Then you have the sell-offs contagion theme. Major pullbacks here. There's a lot of earnings has come out, and especially after the big move for the month, it didn't surprise me that people wanted to take profits, given that these are extremely speculative. Hilton worldwide is the best performing year to date at -44%, but that is still, yeah, it's a loss. Then you have discount retail. Very impressive from eBay here, and Walmart, and Costco. Dividend kings. Stanley Black & Decker is really struggling, but big move for the month. Though this week, the bears, they came back. I am going to look a bit more closely at Stanley Black & Decker, because there are other candidates for this theme that, I could easily replace Stanley Black & Decker. However, when I design these themes and pick stocks, I pick stocks that will, as broadly as possible, reflect the essence of the theme. Hence, it's not about picking winners as such, it's more about picking those who fit the theme. One of the big problems with ETFs is that they are very broad. So if you were to see like an ETF, cybernetics and bionics ETFs, there's no one out there so far, but if someone were to make one, I guarantee you would have pure plays like these, but then you would have these very broad companies that, yes, they do some cybernetics and bionics research, but it doesn't account for much. Always look under the hood. E-commerce, just really stellar performance. You have Expedia, big loss, but this is, basically due to the contagion. Carvana, used car business, gigantic move for the month though. Huge. And the week as well. This is a move. And a good example of how one of the big losers can become the big winners. Then you have the education disruptors. Big move. Environmentalism. Last month, very impressive, but we are still below the S&P 500 year to date. Though, when there is a move, it is big. Then you have femininity, -18%. Some huge gains here from Ulta Beauty and Capri Holdings, and Etsy. Financial technologies, outperforming the S&P 500. Virtue Financial, rather impressive, and also Black Knight. They are in the home ownership data. Their services are probably rather popular now due to the great uncertainties about people's ability to pay their loans. Then you have Genomics, huge month, impressive week, still in the bear camp here to date. Interactive entertainment is an incredibly strong trend. Only Square Enix seeing a loss year to date, but it is actively repairing the damage. Then you have Internet of Things, masculinity, and then the military industry. Given that the Cold War between China and USA is likely to increase in temperature, there is reason to expect moves here. Hence, if we do see some spike in these stocks, then there's all reason to be worried. Then you have Theme Speed. This is where I've done some more significant changes. So Hated Industries remains the same. Some huge moves though. Nutrition and Fitness, somewhat less than the S&P 500, though the fact that the virus attacks people with diabetes and obesity more than other people, that means that is bullish for these companies, and it is very bearish long term for companies in the fast food business. Because when the bill is due to the virus, and it becomes very clear that, well, because of the fast food industry, it got so much worse, expect regulation, tax increases, maybe different taxes based on how unhealthy the product is. Then you have the streaming business. Netflix is just a juggernaut. Healthcare at home, massively outperforming the S&P 500. Portable technology, you have some laggards here. You have Universal Display and HP, but you do see that some are positive year to date, like Nintendo and Fitbit. Data processing, nice gain, and this is a very strong trend. Stationary robots, another example of those strong trends that are in a very early stage, hence there is a lot of volatility. But something that's even in an earlier stage is mobile robots. The best performer is Tesla. Absolutely huge performance. But you could certainly make the case that the move in Tesla, that it's getting excessive. Real money, so gold, platinum, and silver. 4% for the week. Social media, big move from a Match group. Then you have space exploration. I've added some companies here. Virgin Galactic as an example. Ball. So now we have 8 items, like we have in most of the other themes. Virgin Galactic is best for the week, the month, and the year to date. Surveillance and security, a very mixed bag, especially year to date here. Big loss, gain, big loss, gain, big loss, gain. Then you have what I call euphoric spending. The theory behind this theme is that these are all companies that create things for which there are much cheaper alternatives. Hence, these companies are economic indicators. When they will start to go down earlier than other ones. Hence, it is very interesting to look at what happens with these companies. That we have seen a big move over the last month says that there is a pickup in faith here. though they're still massively down year to date. I looked at some previous bear markets as well, and these companies, they had a strong tendency to go down much earlier than the average. Luxury and opulence, it's somewhat similar, but like this is more for like Main Street. This is more like Wall Street. Tiny challengers. These are companies with these are not even small cap. I mean, some of these are nano cap, very tiny. But these are the ones where you can see huge moves. Toxic energy, major recovery. Accepting Chesapeake Energy, which is really in trouble. Also Whiting Petroleum. Both of these are, yeah, they are at real risk of just, totally going bankrupt. Unless there is some saving knight that rescues them. Then you have another theme, that's the employer of many. So these are the companies that employ most people in the world. The reason why this is so interesting, that's because it is when you have that many employees. I mean, we're talking about hundreds of thousands of employees. Some of these even have millions. They are deeply embedded into the political system, meaning these companies, they have access to data that other companies don't have. They are beyond too big to fail. They are systemically important. And when you have that many employees, there's this social networking effect where, you know, people who work for Volkswagen are going to talk about the company, and a very interesting theme. Then you have pets, very good performance. Then you have a new theme that I've made. I replaced the underperformer theme, and this is what I call the turbo foodie. So the companies in this theme, that's companies that make getting food and preparing food much easier. Because that's a strong trend, and I think it is a trend that is going to just it's a trend with a nice trajectory. Food delivery, it's been big, and Domino's Pizza and Chipotle, both of them also deliver their food. Then you have the final one, that is the workplace disruptors, outperforming the market, but extremely mixed bag. Big wins here, huge losses here. Then you have leveraged exchange traded products. The FANG plus Bull 3X ETF had the best move of the week, 35%. Regional banks lost the most, minus 29. Let's go down. So, being bullish stock markets, it worked for the month, but not year to date. That is due to the leverage effect. Because even though the S&P 500 it is negative, the leverage here is something that should be used with caution. Then you have bearish stock markets, bullish countries, still deep in the red year to date, but the last move for the month is big, 52%. Bearish countries, bullish sectors, 50% over the last month. Bearish sectors, energy is the only one with a gain year to date, and that's a big move though, 97%. Bullish subsectors, 73% for the month, and that's huge. I mean, you have some gargantuan movers here like biotech, which also had a big move for the week, 30%. Huge. Bearish subsectors, huge losses. Bullish fixed income, another gain for the week. So yeah, this is really good, and far better than the S&P 500. Bearish fixed income, major losses. Bullish natural resources, only gold working out here. This is the UGLD. This is an ETN, not an ETF. Bearish natural resources. Then you have bullish miscellaneous, 2-ish% for the week, average 23% for the month, and 10% year to date. But there are some, like here, especially year to date, you have the volatility ETF and DTN, they are pulling a lot of the weight. Bearish miscellaneous. Some big moves here. Huge loss here for this one. But this is the short version of this one. You can see here that even though this one is minus 3x, it is down 28%, while this is the opposite one, and it is up 35%. This is one illustration of how these leveraged products, they try to track the underlying, but they do it so imperfectly. I've added another aspect here, and that's the options matrix. I am still working on this one, building it out. But this is about option strategies. But this is in its early stages. Let's spend the next 10 minutes going through some charts. Here we have the WT, Total World Stock Market. Weekly data points. So let's actually measure the retracement here. So from, let's take that high all the way to that low. Yeah, I mean, we are not even at a 50% retracement. And you can see here that we are trying to get up here to this 10-week moving average, but we're rejected. That is the WT. If we go to the S&P 500, there's been more progress here. Let's do a fib retracement like that. This right here is the 50% retracement. We tried to get up there, but we did pull back. So we are still below the 50%. As you can see here, for the week, we surgically tested the blue 100-week moving average. We did see a gain for the week, but the gain was much less than what we could have had. Let's go here to the daily data points. Another key moving average here is the 50-day moving average. If you look at this move here, this is for all intents and purposes an uptrend. This is bullish. But still, we are down significantly we are above the 50% retracement for the dailies. But as far as, we are quite some distance away from 62% retracement. RSI is at 57, but as long as we are above the 5-day moving average in light blue here, the bulls are in charge. The thing is that the stock market is not reflecting the economy. The economy is much worse, and you could check. Yeah, there is a big divergence between Wall Street and Main Street. And if for some reason, which I think is very unlikely, but if we were to break out to a new all-time high, I mean, the social tension would be just that would be parabolic, really be parabolic. Let's look at gold. So here is gold, a huge move. I mean, very impressive here. The week was a bit problematic. You did see this massive pullback. This candlestick it's not a pretty candlestick. It's not. It's not disastrous either. I mean, we've seen these these kinds of candlesticks before, like here and here. Meaning there is a higher probability now that we will see a pullback in gold, but still it is in a very strong uptrend. There are many support levels here. If you go here to the dailies, we pulled back and found support at the 10-day moving average. Could we revisit some of the other moving averages? It could totally happen, and it would be natural and healthy, because the RSI has been elevated for quite some time. So we have really pushed us out of a bear market in gold. But as we go from the liftoff to the normal period of a normal bull market, then we do expect the RSI to be more modest. What other things should we look at? Yeah, let's look at the Uso Oil Fund. Yeah, it broke down to a new low here. That is not too good on the weeklies. Yeah, so the big question is it so bearish that it's bullish? You know, and I do think that some of the biggest bull moves we are going to see this year, it's going to be in this space and other industries that's been ravaged, like the shipping industry and airlines. Let's look at the DBA. That's the agriculture ETF. Yeah, I mean, the bears are very much in control. Very rough times. But is this so bearish that it is bullish? I mean, there's nothing about this saying buy. The only caveat would be, if we go all the way back here, this RSI is extreme. We usually do not get that oversold. Here, there was some buyers stepping in, and you had a huge move. We were rather oversold here as well. We did get some move. Well, not that oversold here, but my point is, okay, in the same way that we can excessively rally, we can excessively sell off. And this is just, yeah, it's extreme. Another thing we should look at, yeah, maybe we should take some of the major companies, like Microsoft. Huge move, very impressive. But if the bulls do not have significant fuel to break us out, there is a risk of a double top. Now let's look at China. We've talked about China a bit. We've seen multiple weeks here of rally. How big is the move? It is 11%. Certainly not as good as the S&P 500. Let's look at a couple other ones. Maybe we should take some companies, like Apple is a classic. Here we have Apple, big move up here to the 20-week moving average. I'm using weekly data points. And what kind of retracement is that? So from there to here, it is approaching a 62% retracement. Well, it was actually a surgical 62% retracement, as you can see. But that's interesting. So we were rejected here at the 62% and also the 20-week moving average. Let's look at NVIDIA. Here, very strong move, but this is critical. So this is bullish, but it is critical that there is follow-through. Follow-through is absolutely critical here, because if we do see some pullback, then we will go from having a fantastic V-shape to a double top. And the double top is bearish. And the algorithms that scan the market, they go berserk when they see double tops and triple tops. Then the algorithms say go short. Let's look at Gilead. So Gilead, this is a virus play. Huge move here from Gilead. If we measure here from this low to this high here, 33%. Gilead is also a very liquid stock, a lot of volume, hence you could go into the options market. Yeah, let's take a final company. Which company should we look at? Yeah, let's take an interesting one. Let's look at Gopro. Ouch. Ouch. Tough times for Gopro. Yeah. And so it's currently trading at around $3, and it's gone all the way here from $82. No, 87. A high of $96. So yeah, let's actually measure the fall, like from here to like there, 97%. Yeah, let the trend be your friend. That was a bit of a look at the markets. This week is going to become very, very interesting, for sure. Week 17. We have seen a very strong recovery in the stock markets, But that recovery was based on the central banks going berserk and printing all kinds of money. And the thing is that there's many other factors beyond the virus. As I said, you have the very real risk of this stock market recovery triggering massive social tension. You also have the problem with America and China fighting for supremacy. USA has a huge army. It does not want the world order to change. It wants to stay in power. Hence, this situation with China and the virus, and the strong indication that China knew more than it is letting on, there's definitively good reason to think that there will be an increase in the temperature of that conflict. That is something that could become far more bearish than the virus itself. Whatever you do, of course, let the trend be your best friend.